Good day, everyone, and welcome to our podcast. Everyone deserves a chance. Allow me to introduce myself. My name is Silvius Grant. I'm a W-2 employee, and I'm looking for financial freedom, investing in commercial real estate. Today, we talk to Hemant Pawar, a W-2 employee who already is successful in commercial real estate. All right, Hamad, welcome and thank you very much for accepting the challenge and a little bit of the time tweak there. I want to point that out. You're so flexible and I really appreciate you. I'm going to read a couple of things here in your bio. I went through it, but I just want to bring it up to the people just so they understand who you are. And then we're going to go into the story that I love so much and is so dear to me right now. So Hamad is right now, he is running Zen Adobe Capital Group. He's a real estate investment and consulting firm that leverages its extensive experience and expertise to provide superior value and returns to its clients through a Security Exchange Commission Reg 506B and C offerings. They build a large profitable portfolio of multifamily assets across premium locations. And as I was doing my homework and I was reading a couple of things, you're an owner-operator of apartments across 9 states in US.
Yes.
Also, you work full-time as an IT program director.
Yes.
Hamad, thank you for coming in and thank you for accepting this invite. I would like you to start by sharing your story.
First of all, thank you for the invite. Glad to be on your podcast. The story is pretty simple. Immigrant to the US, dreams in our eyes, getting a W-2 job, moving between states from colder to warmer, trying to do something that we like personally, spiritually as we grow along. And so I work in healthcare. I manage a large team of people who develop software and different kinds of apps. And my real estate journey really began in 2021 when I especially during the COVID time, when I wanted to start thinking of passive income and financial and time freedom, most of all the time freedom, where I would be able to do things that I enjoy. And earlier in my life, I had started this personal charity part, which I usually don't share a lot, where I had helped around 4 to 5 families of human trafficking victims to restart their life again across the world, wherever they were, through my travels, whoever I came across. And I got so much satisfaction doing that I did want to have spend more time in it, maybe grow it a little bit more, because there are so many people out there who need help, who would do with a consistent support from someone who has been more fortunate than them. And real estate and the passive investment was one way to continue doing that, and as well as contribute more time to it, because the W-2 is not as flexible as you want it to. So that was my journey. It all, the personal sides or the charity side started in 2016, when I was in Michigan and I separated from my first wife, and I thought there's much more to life than just focusing on my personal thing, and maybe I should find the stories that will resonate and that will need my help to become to start a new life. And that's how it had started, by the way. And then when real estate happened, it grew very fast, because I joined hands early with partners. I took on more deals. I took on more responsibilities, and the right kind of mentorship programs, which is what enabled me to progress very fast. And now we have properties in 9 states, and the passive income has started coming from these investments. So that's in a it is a long introduction, but just wanted to cover the key things that you mentioned in my
Yes,
introduction.
I
Yeah.
definitely appreciate it. We had this conversation offline a few minutes ago, and I would bring it back there for a minute. Most of the investors that reach certain status, they start looking back and they start giving because they're looking for a legacy. It usually happens to males that become kings and they're fortunate enough to create enough wealth in their life. You, on the other hand, have a feeling that you started the opposite way, and you started with your helping other people first. And I believe this massive success that you've attracted in such a short time, because if I'm looking back, 2021 is right around the corner, right? To 2023, we're 2 years and a little bit probably over, and you're already in so many states and so many deals, and you're definitely spinning, and the universe is definitely helping you. Despite the mentorships that they're out there, and I want you to name a few because we're looking for recommendations. I'm in your shoes when you
Right.
started.
Right.
And pretty much the people that are watching and they're following us, they want to start, they're going towards financial independence, and it's freedom of time. It's exactly what you said. But they don't know exactly how to start. Like some of them have 401ks, some of them have pensions, they don't believe in the system anymore. Some of them have a little bit of money into their houses, in form of equity. They're thinking of pulling a line of credit. And I don't think this is a good time to do it because of the high interest rates.
Yeah.
But everybody is somewhere at the beginning stage. And I was under the impression after reading some of these books behind me that you have to be established before you start turning towards charity. And
Yeah.
the number vehiculated around me and my family is about 10%. But you
Right.
started on the opposite spectrum. You're doing so much. I want you to touch base a little bit. I know that story from the airport that changed your life, and it's so powerful, at least for me and my family, that I would like you to just go back a little and tell us what happened there and why did that change your life and the people that you impacted.
Uh, sure. I think it's a good opportune time also to share that story because it reached a certain milestone which I never thought it would reach. Um, so back then, when I got divorced and I was just out of the courthouse. Next day, I was traveling back, gonna meet my parents, take a little break, and just be alone for a couple of days. And I landed at the airport and I saw this family who was detained there. One of my cousins was the airport security controller, and I asked why. I mean, I thought it was pretty intriguing because there were like four small girls and a young mother, which I thought was very strange for someone to, just get detained like that. So I found out that they were made to believe of some job offers, which actually were not job offers, but were part of some human trafficking system through which they bring such folks, and they were clueless. But because the cops had to do what they had to do, they were detained and they were being questioned. And that's when I felt like something inside me, where some time, and I hope everyone, not in a bad way, in a good way, gets that experience where you do so much for yourself in your personal. You try to save something that is unsavable, or that has been broken long time back, and you put in so much time, effort, and you're completely empty there, and then you see something like this where a moment of good decision making could change lives or could impact somebody's life. So I jumped in uh, to take care of that family. I spoke to the social workers there. I spoke to the security personnel there. I made sure they went back to their countries without any, a red stamp on their passports, which would have destroyed their lives, anyways, right? Once you have that stamp, you're barred from a country. You basically cannot apply. Your visa process gets pretty difficult for any other country. So made sure that happened. We sent them back to their country. We Over the next few months, we coordinated with the social worker and the local support there to put the girls back into school and college. We built houses for them. The eldest daughter who was who had experience running a shop before they were kicked out by their uncle from their houses, and they were living in the streets. And that's why they thought that this was something that they want to pursue, and someone convince them to come abroad. So that was their background. But we opened a shop for that daughter over the next few years. The kids graduated school, college. The shop grew from like one person managing it to like seven girls like themselves whom they hired to manage it. And 3 weeks back, and that's why I said it's an opportune time to discuss this. 3 weeks back, they moved the shop into a huge mall, and their shop is now, I think, around 5,500 square feet, selling costumes and jewelries, and you're hiring at least 15, 20 people. I mean, I didn't ask all those details, but I saw the photos and I was like, man, when I
Fantastic.
started it, I didn't know it happened. And then it just kept on growing because the next thing, that there's another family, the social worker reached out to me saying, would I like to look at? So it just grew organically, and it from one to second to third to fourth to fifth. And I got so much happiness and satisfaction in that I completely forgot what emotional state I was in when it started. And I meet so many people, and who are like, oh, who do mention to me that it doesn't feel that there was any difference in the happiness quotient, that was the before me and after that incident, because I went through this divorce proceedings, which was emotionally uh, you know uh, really disappointing, and it affected me a little bit during that particular time. But that's how life works, I guess. You find happiness in others, and I guess it takes over you, and it just encompasses whatever you do in life.
Yeah, this is so big and beautiful at the same time. Thank you for sharing. If let's say somebody would like to join you into your cause, like, is there anything that you set up here in the United States that I don't know, it's available for people that are watching you and they would like to contribute or something?
Sure. I mean, there are. I'm specifically, my efforts were towards the victims of human trafficking rings across the world. Recently, I also supported the Ukrainian refugees cause. I started supporting that too. And I think the biggest help that people could give is if they could sponsor some refugees like this to come over, because the United States government has this program which helps people to come over and start their life again. And I have gone through the process. So anyone who wants to help in some way, reach out. I would share all the details with them, and you could be part of this journey in a small or big way, whichever way you want to. um, but yes, you can definitely. I mean, I'll
All
be
right,
glad to join hands. Yeah.
that's good to know. I was thinking, because I really don't know the process. I don't understand the process. I didn't go that route ever before, and I didn't have anybody to ask. So
Sure.
that's why I said you're
Yeah.
so different in so many ways. I'm into this syndication model and this world of multifamily, and now we're going to talk about this. But it seems like the personal side and the personal story, it makes or breaks you as an individual. And with the investment, it works the same exact way. And we're just talking about it, that I have a deal, I'm fundraising, I'm working on with a team of people, and we kind of landed in the middle of the raise, and we don't know how personal this gets when creating relationships, and we only have families and friends. And
Right.
you told me that's not how it's done, that's not how you do it, and you had a totally different perspective on it. Can you please share with us?
Sure. I mean, it's partially right. I mean, I started with friends and family too, but the biggest thing, even when you start with your closest circle and then expand organically, is a couple of questions that people have for you. Number one, have you done this before? That's the key question, right? So if you have not done this before, then are you joining hands with somebody who has done this before? So showcasing a partner's deal or joining hands with someone who has done this in and out, understanding the specifics so you can translate and explain it to your friends and family. and then gain their confidence. That's one way to do it, right? So you probably would have invested in somebody else's deal, but you want to showcase that deal, as something to your friends and family, so you become the active partner, not just be passive on the
Absolutely.
next investment that you do. So that's the second way. One, join hands with someone, partner up. If the partner is okay, they will give you their bio, and you can um, go around marketing your partnership as well as the investments that are involved in the partnership. Second is to showcase your passive investments as something that you believed in and why, and translate that communication as something which enables you to become active in the next deal. That's the second one. Third most important thing is, if you understand and know the business to such a level that when people ask you why this and why not the other, or why stocks and why real estate, and your answers on those, and your understanding of each one's personal and background story, whoever you're talking to, that defines how the person perceives the information that you're giving out, and also the probability of him investing in your deal. Because if there is someone who has done stocks day in and day out all the time, right? And suddenly you take a real estate thing to them, and we the other day I was giving an example. There are many people who can make 7-8% on, let's say, just as an example, let's say a Tesla stock in a day. They have made it, over the last 2-3 years in the stock market. So for such a person, seeing a 7% cash on a 5-year hold, and then the IRR and AR, it they need to they need to really think why that is, and with the
A
tax
good
rates,
deal.
I'm sure, right? Yeah, why that's a good deal. I mean, why are you holding my money for 5 years? How would I? So making sure they understand the differences in the asset classes, where exactly the main differences lie, right? Understanding the psychological motive objective of that person. Why would he invest or why would he not invest, right? So if he would not invest because he's been making so much money on the stocks, for him that's faster return. Here it's not as fast as he would want, right? But there is something else. So selling that something else in the right way, and showing a mirror where their thinking could be wrong in some respects, and it could identify with the objectives of real estate investment. So that kind of developing a story to convince people based on your knowledge, experience, and partnership. That's the third angle. How the information is translated, what information is communicated, and also who you are communicating to. And everyone needs some kind of personal tuning. Someone in stock, someone has a business, someone has so much retirement money that they could live off it by passively investing. Someone has international business, and they want to bring in money, which is something that I have dealt with. So this story usually helps you to communicate the right information to them, and communicate it honestly, and keep the pluses and minuses of the businesses in front of them. But at the same time, the conviction that you have will drive them to have further conversations with you, and that's the key, without
Yep.
being pushy, but at the same time being confident, assertive, and giving them the right and wrong and the whole information. Once you put black and white in front of them, they know they are not you're not trying to just sell something to them blindly.
Absolutely. I thank you for that. And this is the perspective of the syndicator, I would say.
Yeah.
And I brought the conversation this way because this is exactly what I do right now. And this is what we're actively pursuing. We're pursuing deals, and we're fundraising for our deals on constant basis. This is what we do as syndicators. But let's bring it a little bit back down to an individual that wants to start now, because I want to go back into your shoes when you were not a syndicator. You wanted to do this, and how did you start? Like, you
Right.
started with single family home. I bought 4 of them, and I'm not happy with single family homes. So at all, I'm selling them, and I don't want to deal with them no more.
Right.
And this is me exiting right now. But how did you start?
So I think it was April 2021 when I read a book, Bigger Pockets. First time I came to know about Bigger Pockets, which is like a real estate Wikipedia kind of website there out there. And I was reading stuff and I'm like, hey, this looks cool. Let me buy a duplex, right? Because that think that's what they focus in more with single family duplex, the small.
Jay Scott,
Fix.
who wrote that book? Jay?
I
Brandon Turner?
and I think it was Brandon and David Green who
David
were
Green,
the
yes.
top voices at that time, right? And when they were showcasing the returns and how much they have made and how they started, I thought, okay, this is easy. It's just a number based thing. So I purchased a duplex. Then I think in the following month, because I started listening to these things, I saw Rod Cleve's podcast, who is one of the top multifamily real estate icons in the industry. And when I heard his story and what he was talking about, I was like, man, I shouldn't have bought a duplex. I should have got into multifamily. Right? So I joined his education and training program just to understand more. And then through one of their on-site seminars, or they meet every 6 months, the people part of the program. I met so many people like me, and that's where my first partnership happened, which was a simple 7 unit in Denver, Colorado. And um, I'm a people person. I'm I kind of, yeah, you can call me an extrovert, and I can very quickly sense what what could be a possibility even when there is nothing, like out of thin air, right? So sitting on a table with few multifamily interested investor people like myself, I could see that one person is so experienced in his backyard and the other person is so knowledgeable in all the strategic things, and I am here who can join hands and make it all work. And I'm like, hey, why don't you look for something in your backyard, and we'll join hands. And that person had never joined hands with anyone. I think it was their first partnership too. So
Wow.
so it started like a little hesitant, but then he was like, yeah, I think I have something for you guys. Let's discuss. And it just happened like that. Next month we purchased the property. We value added. We ran it. We sold it 11 months later because we wanted to take the maximum benefit of the market cycle. And Denver is not a big cash flow market. It's more of the equity market. So we were careful on that front. But while that was happening, I was also interacting and connecting with a lot of people in the Facebook groups and commenting on somebody's success or somebody going under contract or somebody saying good things about somebody's deal. And that's how I connected with this group of people who wanted me to join hands on I mean, we were discussing and they're like, why don't you join hands with us? And they had a large 123 unit deal, which needed some kind of capital raise help. And I said, let me try. And that's how I started Friends and Family, raised around $1 million for that. They're so happy. They also gave me a big chunk of the asset management portion, so I could also learn on the deal and get paid also on those activities. So that was quite interesting and quite fortunate to join hands with such folks who did not treat me as a newcomer or a newbie. And that was something that really fast tracked my journey. And then once you get the first deal, the second happens very quickly, and then the third and fourth and fifth and sixth. So that's how the journey started.
Now let me be the devil's advocate here for a second and say, well, lucky for you, we're able to raise $1 million from your family and friends, because my family and friends are broke. So I hear this a lot. I hear this a lot from the people that I work with, and it comes up in the industry a lot. Like, I don't have anybody to raise money from, and that's the reason why I'm not thinking multifamily. But if I can go back to that first deal for a second, you guys were three guys. Did you take a loan, or you guys put equal amounts of money, or how did you? Because that's so important, because I know you guys were successful. And that's what created the opportunity for the second deal. And, it moved from, because most of my mentors are saying, Grant Cardone including, he says all the time, says if your first deal goes south, then you're not going to have enough energy to go into a second one.
Right.
So how was it that first initial one?
Right. I think yeah, it was probably the easiest one. Even when before deciding it, I could see the possibility that this would be the easiest thing to do in the world, because this person, who was local in Denver, my partner, um, he had already like fixed and flipped like 15 apartments, right?
Oh, I see,
Not
not
single
experience.
family, but 15 apartments, right? And so they had so much experience in basically due diligence, analyzing, running contract process, having contractors in place. And I'm like, why are we not even, what is there to think? Just ask them to find the next one and jump on, right? So yes, there was a loan, there was a mortgage, and we did invest. Our own money in it. Someone invested more, someone invested less, based on some of the responsibilities and activities we carved out different percentages for every partner. It was all mutually agreed across the table. Any doubts we had, any concerns we had, were all discussed and shared with each other, and we reached a joint agreement as to how it will be, right? And um, the most important thing in the joint ventures or the partnerships is, if you can discuss the difficult points early on, it's much simpler, it's much easier, because then, for example, how much will I get in return for putting in this money? What kind of activities am I supposed to do? Are those activities worthy enough for the kind of returns I'm getting? What kind of responsibility somebody is going to take? What will be each one's role? In a joint venture, especially, your roles and activities are something that you have to be careful. I mean, it's not a passive thing at all, right? Somebody can, even if you're taking the minutes of your meeting, still you can do that. Still it will be good, but do something on the deal. So, but majority of the workload was taken by this local partner, who also took a majority of the share, and the rest of us, we took on different responsibilities on strategy, on due diligence, on reviews and audits, and minutes of meetings and item list. And that's how we got the team together. And when we sold it, I think each one of us made around 55% profit on that in 11 months. So it was all, yeah,
It was a
what I would say,
successful deal,
yeah,
yeah.
successful and quite well compensated for every partner.
Yeah, that's beautiful. Now I'm gonna dig a little deeper. I don't need the numbers. I just want to see the structure. So in this case, with 3 guys taking down 7 units, did you need a signature, or you went down with like 25%? You went to the bank and you got a loan.
Yeah, so I think the local partner was the manager who had a bank in place for all his other properties. So they signed on the loan. Um, they were, majority, let's say 60% plus partner. We were 20% plus kind of
Okay.
partners. Um, and they brought in more capital, as well as they took over the asset management,
Okay.
yeah, on boots on the ground kind of activities. Um, but the bank also wanted them to sign, since they are the majority partner. That usually happens.
Okay.
If you have a existing relationship with the bank and you are majority partner in a JV, they might just ask you to sign. They may not even ask the other partners to sign. But if everyone has like an equal partnership stake, or they see that somebody else's bio reads much more in experience and skill sets and financial stability, they may ask the other person also to sign. Ideally, everybody signs, it's good. Even if one or two people, if the bank asks one or two people to sign and not the others, that's still fine. I have another JV where I was the majority partner and the bank asked me to sign and none of the other partners to sign. So that, it was
Okay.
a non-recourse loan, so it's okay.
Yeah, the question that I was addressing is because I get some of the people that are meeting at networking events. Their instinct is to become limited partners. That's their first instinct. Then they learn about being a general partner, and then they're like, okay, I would like to know more. And then they're saying to me, well, I'm not going to be a general partner in this deal because I want to buy my own.
Mm.
And then when I dig deeper, they only have money for down payment if they do have the 20-25%. And then they don't know that they actually have to sign for the loan and they cannot cover that by themselves. Because I tried that route myself. My idea was that I'm going to sell all the properties I have. I'm going to put $1 million down and I'm going to finance for a $3 million construction loan. That was my initial idea. And then when I start looking into it, I'm like, you need somebody to sign on. I'm like, well, it's me. Like, what do you need a signature for? Like, I'm putting 30% down. And then I just realized, I'm like, well, I'm building 20 units plus. So then everything shifted, and all the work that I did prior to syndication didn't make any sense anymore. So this is what pulled me and pushed me into the syndication model. And that's why I wanted to ask you directly, because I want to eliminate this conception that, I'm going to do it myself. I'm going to go ahead and I'm going to buy it.
So the thing is, you can do things on yourself based on your current liquidity and net worth, right? If
Yes, correct.
you could probably do, if you have 200,000 in the bank, I'm sure you can do a 5 or a 6 unit or 8 unit somewhere, and nobody's gonna ask you much. I mean, well, especially the tertiary markets. But what happens when the assets start getting bigger, and especially in non-recourse loans, is they are looking for someone whose net worth is equivalent to the loan amount, and that person can keep 10% of his liquidity in the account. Like a 10% of the loan amount should be in your account. They need to see that all the time. That should not be used towards the deal, right?
Okay.
So these two things are important when the non-recourse loans are signed, and especially for larger deals. So sure, you can do deals on your own, but as the size starts growing, and then depending on what kind of lender you have, their um, requirements change, and these are the couple of things that you need to be aware of. Right?
Is there a specific number of units, like after 10 units they change the requirements, as far as you know, or after?
The requirement is based on the purchase price and your ability, right?
Okay. So your net worth.
It's your net worth.
Okay.
Which is why I said, if you buy a 6 unit for 400K and you already have 200K in the bank, or if the purchase price is 500K, then I don't think it should be a problem. You're already coming down with most of the down payment but once it starts growing, then they start looking at what other things that you have. So that's
Is there something that I don't understand, and I'm going to take the liberty of asking you.
sure.
On the non-recourse loan, what does it mean? Like, when does it become recourse? Like, is there a hidden clause in it? Because my friends and investors, they're saying to me, some of them, not everybody, obviously, they're like, okay, so I can sign on 10 deals at once just because I worth over $1 million in the bank. And I'm like, I really don't know. I don't know. So I'm asking the question.
It so difference between recourse and non-recourse is, if you're not able to pay your debt in the non-recourse loans, they will take the asset. In the recourse loans, they will come after you and your assets.
Is there a bridge at any point in time where they can travel after you? The asset doesn't cover it?
So when I say non-recourse loan are based on the asset, it is 90%. Let's say, I'm just throwing a number, the 90% true, but in 10% cases, they have a bad boy clause. So if they feel that the main operators or the guarantors have not complied with certain requirements, have misused the funds, or some kind of forgery, or some kind of fraud has happened in the financials, they will come after you, even if it's a non-recourse loan. So the person who signs as the loan guarantor in the non-recourse loan, their net worth and their liquidity is what the banks will come after.
Okay, thank you for clarifying that for me.
So that's the bad boy clause. Fraud or any kind of doing illegal stuff while operating, then the
I
bad boy
was
clause comes into picture, and then instead of the asset, they will go after you.
No, okay. I was reading through my LinkedIn profile a few days ago, and there was a $296 million deal somewhere in Texas where the company went under. There were four different deals in it,
Yeah,
four different buildings.
yeah.
And the first comment that came on says the signature guy is out of the country already. So I
Yeah,
was like, wow.
yeah, I think I heard about it. Um, well, the thing is, if there is no fraud happened or there's no bad boy clause, which had to be implemented, then nobody has a reason to go out of the country. I mean, they they will just take over the asset and give it to somebody else, right? And uh, but if you have misused the funds, or if there's any investigation that says that some kind of fraud has happened, then they will come after you. But
They go
people
after you.
obviously get scared a lot, and then they want to go out of the country, or it's
Yeah, it's just, I don't know.
yeah,
We don't know. That's not verified. That's something that I
yeah,
read, and
yeah,
right away I was stunned. Like, this guy signed, he
yeah,
had a clause in there. It was
yeah,
recourse. Like,
yeah,
that was my first thinking. I'm
yeah,
like, they somehow they came after him if he had to
yeah,
leave the country. I'm
yeah,
not sure if
yeah,
it's true or not. We're
yeah,
not going to go that route. But
sure.
it really debunks a question that I get from my investors. They're asking me, how is this going to happen in case, let's say, you're not going to make the mortgage payments? How is this going to unfold if the bank has to take back the asset? Like, how is that going to affect the actual investors, the limited partners?
So in the case that you just mentioned, and if you saw the comment section also, I saw one guy's comment below which said that he had invested a six figure in that portfolio, and he lost all his money, right?
Oh,
So that is the worst thing that can happen, where the bank takes over the property, tries to foreclose it, and somebody buys it, but they are not even able to cover the principal payment that the earlier party owes to the bank. So then, all people just lose money because the bank is at loss itself. Bank has sold it at a loss. How will the investors? Bank has the first lien always. The lender has the first lien always, right? So their payments come first, and then the rest. But if they sell it for such a discount because of foreclosure, then the investors don't get their money anyways, right?
oh,
So
okay. So that's the actual issue. The actual issue that I'm seeing is, in case the building doesn't perform and the loan is not being paid, the bank, lien one, first lien position,
yes,
comes back, repossesses the property, and then they're gonna go through the foreclosure process,
yeah,
selling it. And if they sell it under, there's, even if they sell it for the amount of the loan, the investors are not getting anything back.
yeah. And in this
That's
case, especially, I mean, I don't want to talk a lot about this case because it's
Oh, no, no, no,
we
no. I
don't
don't
know the
want
details.
to talk
But
about the case. I
just
was
to
just
give you an example, think they probably own like 220 million principal on the property, and they sold it in full foreclosure for 178. So that's
So
the
it's a
kind of
big loss
loss
for the
loss
bank.
bank.
Yeah,
Yeah.
it's a big loss for the bank too. Okay.
So
Well, it's
yeah,
really good
yeah,
to know, because at the beginning of the
yeah,
journey, we really want to know. These are the things that bother me at night when I
yeah,
don't have answers for it, and
yeah,
these are the main
yeah,
concerns of the people that want to invest, especially in these times, and they hear these scenarios. I mean,
yeah,
I'm friends with them on LinkedIn too. I'm sure that I clicked liked on this uh,
yeah.
scenario, and,
And
and they watched it.
I may be a little off on those numbers, but like I said, I just gave a sample example.
Yeah, it's just an
But
example.
that's
I just needed
yeah,
to know as
yeah,
far as the process goes. So
process.
there's a
And
risk.
but I also want to highlight something, that the lenders are not sharks. It's not that you miss a payment and they will come after. There's a process, and in my experience, the lenders are also forthcoming, and they do want to make sure that they can extend all their help for you to tide the rough waters if you are in rough waters right now, right? So healthy communication with the lenders, making them aware of the current situation of your operations. If you feel that there's some risk in non-payment, making them aware, having a healthy conversation. Sometimes they do extend themselves, they change some terms, they try to give you a few days, a few months to bring it back on track. And only when it's that the last option, If nothing is working out, is then they will come back and try to foreclose. But it doesn't happen like overnight. And if you are a decent operator and you have such kind of problems, I'm sure many people can sail through such rough waters and come back successfully and still pay the loan.
Literally, we just talked about the worst expected scenario ever, and I'm glad you made some light here. You shed some light for me and for the people watching this. Before I let you go, I have a couple questions about the mastermind communities that you
Sure.
just mentioned. Rod Khalif. I am a member of the Warrior program. I
Nice.
took just the online version. I didn't go in person yet. I did it in February,
Yeah.
and it was a three-day
Yeah.
three-day
Boot camp event.
virtual
Yeah.
I took.
Yeah. 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 Yeah.
And then I had the pleasure of meeting him actually in he was at GrowthCon in Vegas.
Oh yeah.
Yeah, I saw him, he
Yes.
was dressed the same exact way. I'm like, I
Yeah.
know that guy.
Yeah, yeah. I think one big takeaway, biggest thing that you can learn from him is he's always learning, and he goes to many such conferences, and it's something that we all as new investors should definitely learn from. These more accomplished folks where they are always learning. They go to various conferences, meet various people. They do want to see what's going on in the world of real estate, what other people are doing. So that's something that we should also try and do. Meet as many people, try to go to many as many education programs as you can, GrowthCon, for example, or any other multifamily conference that you feel you have time to go to.
Okay, that's great. And just by going through all these events, pretty much you start meeting people and create friendships, just like you did with the 7 units in Colorado. So I guess that's one of the ways. And I heard you saying this, and I'm just gonna go back to it for a second. If you want to take the elevator, you take a mentor or mentorship class, or if you want to you can do the hard stuff with the books. You can pull everything out of the books and you can learn the formulas and pull knowledge from there. But the most important, I'm assuming here, but I'm going to give it back to you. When you're part of a deal, that's when you get to understand pretty much the mechanics from inside out, right?
Correct. I mean, there's nothing like learning hands-on. In fact, many times even though you go through education programs and um, all the angles that you need to cover theoretically, and be aware of the legal and other compliances. It is when you actually do a deal, start signing documents, start talking to people, and try to run it together is when the real learning happens. So, in my suggestion is always to, whether it is like some people are very stuck up on locations, number of units, etc. But my my guidance has always been, whether it is 8 units or 800 units, something that happens sooner will fast track your success.
That's a very good advice. Thank you for sharing that. That's good because most of the people get into analysis paralysis, and I'm guilty of doing that. Before I bought my first single family home, I think I contemplated since 2016 to 2019, almost 3 years. And I was on Bigger Pockets every day and commenting and talking to people and just walking properties. Like I was wasting people's time. I was
Yeah,
just getting appointments after appointments, and I went like 3 different states on one side, 3 different states on a different one. So analysis paralysis is definitely something that I've experienced firsthand. So
okay.
yeah, now I totally understand your advice, and I really appreciate it.
Yeah, and
If we
and remember, before just to add to that comment, I met so many people who have done who started with 4 or 5 units, or even duplexes for that matter, and then slowly they grew 6, 8, 10, and they have probably total 40, 45 units, which they self-manage, and have also have a property manager on some, and they are financially free, because they were able to contribute so much of the time and effort in managing that, learning on the ground, and then applying it into their next deal. So, like I said, starting small is also not, um, uh, you know, is also advisable basically. So, Don't just go for the larger number of doors.
Yeah, that's good, because if the opportunity comes, and like you said, it's the first one that presented, then it's probably there's a reason why it's there for you and you coming to it. That's really interesting. If I know you did a lot of deals and now you are in 9 different states. If some of my listeners would like to invest with you, how can they find you? Do you have a website, or how do they come across? I'm definitely going to spread the word. I'm going to give them your information, but I just want to hear it from you.
Sure. So my website is zenabodegroup.com. You can send me a message through the website, or they can even text me on my number, which is 925-694-2677. And I love to talk to new folks, new investors, and they need anything. They just need information. They just feel like having a chat about their journey. I'm always open to that. And my email is hemant@zenabodegroup.com. So those three ways I'm always available.
Oh, that's great. If anybody needs any information, I have it. I'm gonna work on posting it on the comments on the podcast, even in the description if I can. I'm gonna leave some. I do have some of my investors that are in some of my deals, and they want to diversify. They want to go with different syndicators as well.
Yeah.
Because this is commercial real estate. You don't want to take risk with one individual, especially at first.
Yeah.
So that's why I'm asking. And because of the number of deals you did, because of the experience you created, and which was very quick, but it looks like it's something very common in commercial space. It looks like this acceleration of knowledge creates opportunity right away, if and only if you take the right steps and you say yes to the deals that are coming across the table, and you're not waiting for the 32 units deal that Grant Cardone is talking about all the time, right? He says the opposite. He says, "Oh, you got to start at 32 minimum because you don't have any money to manage." But he's taking the human part, like you just said. You can self-manage up until you get there.
See, and the fact of the current times and the current market is the whole real estate domain that changed dramatically in the last 3 years, especially during and after COVID, right? Multifamily and commercial real estate didn't have the kind of competition we are seeing during COVID and post-COVID times. So someone might just wait forever to find that right deal, or you could see what comes at hand, make sense, the numbers work, and go ahead. And that's what I will say, because the competition right now is huge, and the whole space turned upside down during COVID. People sitting at home during COVID started thinking, how can I sit at home permanently with passive investment? And the number one thing that was consistent and secure and gave some healthy returns was real estate. So people like me, hundreds and thousands of them jumped into real estate.
You changed the environment. A lot of things have changed for the past few years. I totally agree. And I still find right now is being the best time ever in commercial space. I just started. I only got 3 months. I started in December of last year with a 10x event. And very quickly, I realized this is the time. This is the right time to invest. And it's either as a passive investor, as a limited partner, or as a general partner into a deal, if you have enough knowledge to understand what's going on and take that job. Because at the end of the day, you are taking a role into a syndication. You're taking an active role into a syndication. So you are going to be managing a deal, a real deal. I really thank you for your time. I appreciate you coming over today. I do have more questions, but I'm going to leave them for a future interview.
Sure. Thank you so much, Silvius.
Once again, thank you so much, and keep doing what you're doing. We're grateful that someone like you is doing this. That was the underlining story, and that's what really attracted me at first. And I strongly believe that this is part of your success is coming because of the motivation that you put behind it and the work that you're doing behind the scenes. And one more thing before I let you go, I heard something I want you to confirm. You giving away 80% of your salary to the charities right now?
Yeah, it's actually around 90.
Wow.
I-
Congratulations, man. And thank you
so
very much.
thank you. I mean,
Wow.
numbers is it's just a number. It's whatever it takes to make their lives better. That's what I was doing. So hopefully, I'll start focusing on my personal life. This year. That's what the plan was. Kind of settle
You're gonna
down a
have
little
plenty
bit.
of family to
Yeah.
support you now. Or
Yeah.
everybody that you've been helping now, they're gonna come together to support you.
I need
Yes.
to, yeah, I need to focus on my personal life, maybe find a partner and, start a family of my own sometime. But yeah, the journey's been exciting, blessed and grateful to whatever I got so far, the connections I made, the friends and family who supported me, and the grace of God that helped me in my real estate journey too. So I think that's how I would like to conclude.
Thank you very much, Hemant Pawar. I really appreciate you. Have a blessed day and keep doing what you're doing. Thank you very much for coming in. Appreciate
Thank you,
it.
Silvius. I appreciate it.
You're
Thank you
welcome.
so much.